This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Cisco shares slammed. Tech bellwether Cisco warning the street of tough times ahead, and its earnings report tonight will likely set the tone for trading tomorrow.
Red flag for retail. Macy's reports a rare earnings miss, casting a shadow over the outlook for consumer spending. Now focus turns to tomorrow's reports from Walmart and Kohl's and whether a key component of the U.S. economy is starting to soften.
A new threat to Apple, a company you've likely never heard of, is trying to beat Apple at its own game. The place, China. The weapon, a cheaper smartphone. All that and more tonight on Nightly Business Report for Wednesday, August 14th.
Good evening, everyone. Cisco out tonight with earnings that top estimates and solid revenues, but it's this quarter that's worrying investors. CEO John Chambers is warning its revenue will be below Wall Street expectations, and he says it'll lay off 5% of its workforce. That's about 4,000 people. Shares fell as much as 9% in after-hours trading. John Fort joins us now from San Jose. John?
Susie, one of the things that John Chambers said on the call is that Cisco's having fits reading the economic data, and that really pretty much summarizes the after-hours action and analyst questions about what exactly Cisco is doing. John Chambers said that the global GDP growth and lack thereof just shows an enormous amount of inconsistency. One aspect of their business, the switching business, looks pretty good. On the other hand, the routing business, except for at the edge, looks pretty bad. Certain geographies, Northern Europe, North America, look pretty good. But then on the other hand, Japan, China don't look as good. So what Chambers said is that Cisco is committed to delivering on the financial model that Cisco had put out, around 61, 62% gross margins and growth overall in earnings faster than revenue in most quarters. That necessitates these cuts. But there are lots of questions going forward about whether Cisco really will be able to grow most of the time in that 5 to 7% revenue band that John Chambers has promised. That's what we're going to be talking about a lot tomorrow.
And tomorrow, John, a lot of investors are going to be wondering how what Cisco is saying translates over to other tech companies. Which companies might be impacted by these comments tonight?
Well, Susie, I think you've got to consider what we saw from IBM, what we saw from Oracle just a couple weeks ago, also having issues with their core products and with revenue. Does this global uncertainty really mean that demand overall is getting soft in certain markets, emerging markets being one of the areas where Cisco cited real uncertainty, some markets strong, some markets weak? I think that is going to be the question from Cisco that then gets asked to a lot of other executives in the days ahead. Are you seeing the same uncertainty? Is this revenue shortfall just an overall macro demand issue that we're going to continue to see cropping up?
Very quickly, was anybody looking for the company to lay off 5% of its workforce, 4,000 workers? Did anybody think that the prospects were that weak?
Nobody that I talked to, Tyler. Remember, the stock was up above $26 a share. There was this idea that the turnaround is complete. Seems not so much the case.
All right, John Ford, thank you very much. Macy's shares skidded today after the world's largest department store chain reported lower than forecast earnings last quarter. And that's not all. It cut its full-year outlook, saying consumer spending was slower than expected over the past 3 months. Macy's stock down 4.5%, one of the worst performing companies in the S&P 500 index today. And now some economists fear that the slip in sales at Macy's may foreshadow more disappointing earnings at more of the nation's big retailers. Courtney Reagan has the story.
For the first time in 25 quarters, Macy's reported an earnings miss. The iconic department store posting profit, sales, and forward guidance below Wall Street's expectations. Macy's CEO Terry Lundgren said consumers continue to feel uncertain about spending on discretionary items, suggesting the miss could be a broad-based concern for the entire retail sector.
You're seeing auto sales strong, you're seeing housing rebounding, but small ticket purchases seem to be under pressure.
Since many expected Macy's to be one of the retail standouts this reporting season, there's further reason to be concerned that reports from Walmart, Kohl's, JCPenney, and others could be even worse. But Macy's executives think the weak quarter was just a speed bump. On the earnings call, CFO Karen Hoguet told analysts the retailer is, quote, doing significantly better so far in Q3. It feels like we're onto a new trend in the past 2.5 weeks. Good news for what many believe is a delayed back-to-school season.
June and July were clearly weaker. That showed up in Macy's results, and I think we're going to see it in others over the next 2 weeks. But I think the reality is what that could mean forward-looking is a stronger push for back to school in August and September.
Walmart reports its quarterly results before the opening bell tomorrow. The world's largest retailer often indicates the financial health and sentiment of the lower income consumer. Analysts have been lowering expectations, though, ahead of Walmart's earnings, as the consumer appears to be holding off on discretionary spending. But Walmart's mass assortment of staple goods will likely soften the blow, something Kohl's may not be as insulated from. Nordstrom is expected to post the strongest results of the retailers reporting Thursday. Many point to the resilience and confidence of the higher-income consumer for more stable sales. Overall, while second quarter results may come in weaker than many had hoped, stronger sales could be ahead. With the all-important fourth quarter on the horizon, retailers and investors are counting on it. For Nightly Business Report, I'm Courtney Reagan.
Those disappointing earnings from Macy's pulled down the major stock averages today, and more Fed talk didn't help matters, keeping investors focused on the timing and pace of a potential reduction in stimulus. And not even a nearly 2% rise in Apple shares, which briefly traded above $500 today, could lift the markets out of the red. The blue chip Dow stocks recorded their worst day since the end of June, falling 113 points. The Nasdaq lower by 15, and the S&P 500 ended down 8 points. Over in the bond market, the yield on the 10-year Treasury note slipped a fraction to 2.71%.
As Susie just mentioned, Apple shares were up again today. They hit their highest levels since late January. The move, capping the best three-day run for Apple in more than 3 years, came a day after activist investor Carl Icahn tweeted that he's made a big investment in the stock, which he considers undervalued. By contrast, tech titan Larry Ellison of Oracle told an interviewer that he doesn't think Apple can regain its past glory without Steve Jobs. Here to debate Apple is Tim Lesko, portfolio manager at Granite Investment Advisors, and Max Wolf, senior analyst at Greencrest Capital. Welcome to you both. Max, I want to begin with you, but before we do, why don't we run that soundbite from the interview the other day with Mr. Ellison? Just listen in.
We saw Apple with Steve Jobs. We saw Apple without Steve Jobs. We saw Apple with Steve Jobs. Now we're going to see Apple without Steve Jobs.
So you're shorting Apple?
I'm not shorting Apple. I think I like Tim Cook. I mean, I think there are a lot of talented people over there.
You just
but Steve
said
is
to me,
irreplaceable.
Apple is going down without Steve Jobs. That's exactly what you said.
Yeah, they are.
Apple is going down without Steve Jobs.
Okay, I'll say it publicly. He's irreplaceable. Yeah, I don't see how they will not be nearly so successful because he's gone.
They're going down without Steve Jobs. Max, what do you think of that?
So thanks for having me. I think there's always a little bit of Ellison speak, and I don't think it's totally shocking that as a larger-than-life, big ego, big personality who's also a founder over at Oracle, Mr. Ellison is pretty warm to the thesis that his close friend and another founder and larger-than-life titan in Steve Jobs is not replaceable. I think pretty much everyone believes that. The question is the company worth more than where it's trading today? The answer is probably yes, but in the long term, are they going to regain the $700 share price or the momentum or the sort of lonely place atop the smartphone industry? And there I would cautiously, if for different reasons, more or less agree with Larry that I don't think they're going to go back to where they were 2 years ago.
So you think they can be good in the short term, but not great the way they were?
Yeah, I think that's probably where they're going because of the way the technology industry works. It's not really just a story about one larger-than-life CEO.
Tim, let's get you in on this conversation. What do you think of what Max is saying and also what Larry Ellison said? Has Apple lost its magic, and why are you bullish?
Well, I think what the other guest has said is pretty fair. Apple without Steve Jobs may lose the visionary products that are coming down the pipeline 6 or 7 years from now. But the product life cycles that Apple has are usually 5, 6, 7 years in development. So I don't think we've quite.
It looks like we've lost Mr. Lesko's satellite. Max, are you still with us? I hope you are.
Absolutely,
All
absolutely.
Right, let's come back to you and hope we can restore Mr. Lesko's signal there. So Icon goes into the stock. I'm guessing he wants a product called the Icon as the next thing out of Apple. But should I be following what he's doing? I mean, you seem to share his view that at least in the short term, the stock is undervalued. Your concerns are more about the long-term value and questioning those bulls. And boy, I'll bet you Icon's gone long before this, who would like to see that stock go above 700, 800, 900, maybe $1,000.
Yeah, so certainly Carl Icahn is a legendary investor. He's having a very good year. He's had an incredible career. Always worth taking seriously what he has to say. It's also always worth remembering that Carl Icahn is always investing in two things: his own legacy and position as Carl Icahn and whatever he's talking about in the moment. If you're a retail investor, you should be less concerned with taking care of Carl, who's taken very good care of himself and will continue to do so, and be more concerned in the underlying investment. I think that his thesis makes a certain sense, but he's asking the company to do something that he knows full well that it basically can't and definitely won't do, and folks should factor that in, even though Carl is widely respected and deservedly so, and a sort of leader among in the space.
Max, a lot of people are counting on new products coming out of Apple, most notably in September, a new iPhone. If it's not a wow factor, then what happens to Apple stock after that?
Look, I absolutely agree with you. It's an excellent point. There's going to be a ton of pressure on the new iPad that we think is coming, and at least one new iPhone 5S and maybe a more affordable version. I'll be looking most at iOS 7, the new mobile operating system, which will be running on all of their newer devices pretty quickly once people start downloading it, and also at the phone. So we need to see two things really hit. We need to see some kind of verbiage about new products, perhaps a watch, perhaps some other wearable, which we think is going to be the future here. And we need to see a public that's excited about this bold new look in iOS 7, the new operating system, which really will look and feel a bit different in the hands of the iPad and iPhone user than iOS 6, the previous operating system, did, because the design and the sort of thematic is radically altered.
All right, Max Wolf, thank you very much. We'd hoped, obviously, for more of a bull-bear debate, but our bull, Tim Lesko, we had a problem with the satellite. We apologize for that, but we're grateful to him for joining us. Appreciate it, Max.
Thank you. Thank you very much.
And later in the show, we'll tell you about a major challenge facing Apple, this one in China, one of the world's key markets. But first, the road to energy independence. We're going to look at how Mexico may soon play a role in reducing U.S. dependence on Mideast oil. And here's a look at how the international markets closed today.
Some encouraging news about all the debt U.S. consumers carry. The New York Federal Reserve Bank reports that Americans trimmed their overall debt in the second quarter of this year, getting help from falling mortgage rates, which allowed more borrowers to pay down their home loans and pay more of their other bills on time. Total household debt is now at its lowest level since 2006. Even though student debt and auto loans rose last quarter, delinquency rates on household debt dropped to just 7.6% in the spring.
Chegg, this is the online textbook rental company, filed paperwork today to begin selling stock to the public. The company hopes to raise $150 million in the initial public stock offering to help pay off $21 million in outstanding debt and to gain access to public equity markets. Chegg also announced 4 new additions to its board, including the CEO of Shutterfly and a Facebook executive.
And we begin Market Focus tonight with a company that went public today, Envision Healthcare, the biggest operator of U.S. ambulance services, rose on its first day of trading. The company expects demand to grow for outsourced medical services as healthcare costs rise and the population ages. It's the biggest healthcare IPO to come to market since February. Firm priced at $23 and closed today up 9% at $25.15. Farmers bought tractors and harvesters last quarter, and that helped Deere run like one. The world's largest maker of agricultural equipment easily beat earnings expectations. At the same time, though, the company said fourth quarter profits may fall below last year's levels, and that pressured the stock, which fell almost 2% to $82.34. And shares of Cree, the energy-efficient lighting maker, falling sharply today on a disappointing outlook. The company says sales of its high-margin products are expected to remain flat from the prior quarter. Cree has stated that its long-term goal is to get all of its customers to upgrade to LED lighting. The stock down a whopping 22% today to close at $58.83.
A different story for tech firm Brocade. Profits at the network equipment makers more than doubled compared to a year ago, and the company says demand for its storage products is improving. Even though its revenue fell, the company did beat expectations, and that's thanks to higher margins and a settlement gain. The stock surged almost 16% to $7.99. Radio Shack is reportedly looking to refinance its debt with new lower-cost loans. The struggling electronics retailer says it can avoid a restructuring if it can pay off current lenders, including Bank of America and Wells Fargo. But it's not clear whether such a refinancing can actually be accomplished. The stock rose more than 7%. Rather, it rose about a fraction to $2.77. And some sweet music is being played for Steinway shareholders. The stock climbing today after the musical instrument maker said it would be taken private by Paulson & Company. The price tag values the 160-year-old company at $512 million. Steinway canceled its previous deal with Kohlberg & Company. The stock rose more than 7% to $41.29.
Prosecutors in New York City charged two former J.P. Morgan Chase employees in connection with last year's massive $6 billion trading loss orchestrated by the bank's so-called London whale. The two traders, who were both based in London, are accused of falsifying records to mask the plummeting value of derivative securities and concealing the size of the bank's losses. Here's part of what U.S. Attorney Preet Bharara of the Southern District of New York had to say about the charges he filed today and the impact on investors.
The defendants deliberately and repeatedly lied about the fair value of billions of dollars in assets on J.P. Morgan's books in order to cover up massive losses that mounted month after month at the beginning of 2012. Those lies misled investors, regulators, and the public, and they constituted federal crimes.
A tragic day for UPS. A large UPS cargo plane crashed and burst into flames, killing its pilot and co-pilot this morning right outside the airport in Birmingham, Alabama. No one on the ground was injured. Aviation regulators say no distress calls were made to the airport tower just before the crash, and the cause is under investigation.
The political turmoil in Egypt erupted into violent and deadly confrontations between military police officers and supporters of the ousted President Mohamed Morsi overnight. Now, a month-long state of emergency and a nighttime curfew have been imposed. The latest on the bloody protests now from Ayman Moyeldin in Cairo.
After 11 hours of operations involving armored personnel carriers, bulldozers, and helicopters, the Egyptian police say they are now in control of two squares in the capital, Cairo, that had been used for the past month as the major locations for sit-in protests in support of ousted President Mohamed Morsi. Now, the Egyptian government has declared a state of emergency across the country for the next 30 days. And in addition to that, they are imposing a nightly curfew on the capital, Cairo, and other major cities across the country. Anyone who violates it, they say, will be imprisoned. Now, the use of force today has come under sharp criticism, including from the country's interim vice president. Mohamed al-Baradei, the Nobel laureate, has resigned in opposition over how the government has used force in what many people here are describing as a bloody massacre. For Nightly Business Report, I'm Ayman Moyeldin in Cairo.
Mexico recently announced that it wants to overhaul the country's restrictive energy laws, reversing more than 50 years of state-owned oil production. The move would open up the region to foreign oil companies, including American ones like Exxon and Chevron. Michelle Caruso-Cabrera has been following the story. So, Michelle, 50 years that it's been done one way, no private companies in. Sounds like a really big deal.
This is
Mexico.
Incredibly significant. Yes, as you say, Mexican oil has always been produced now by a government government-run monopoly, which is incredibly inefficient. And they lack money now and know-how to keep up with the pace of what's going on in innovation in oil exploration. As a result, their oil production used to be as much as 3.5 million barrels per day. Now it's down to 2.5 million barrels per day, and they're spending a lot more money to get less oil. The government needs that revenue desperately, so they have to do something to turn that around.
So let's say Western companies come in and they invest and more oil comes out of Mexico. Does that mean that the price of oil in the United States and on the world markets will come down and that we will be less dependent on Middle Eastern oil?
Presumably, yes, right? If they start to increase production, we have now a triad, Canada, the United States, and Mexico being energy producers, get us, the United States, getting energy from friendly countries. I would also point out Americans should think about the fact that companies like Chevron, Exxon, et cetera, will now have another revenue stream possibly as well. And also, it will help the Mexican economy. Great to have our southern neighbor have an even better economy, would reduce illegal immigration as well.
This still has to go through a political hurdle. The Mexican Congress has to approve it. What are the chances that this gets blocked?
Likely, but it's still going to be difficult. You have to understand that oil in Mexico is very personal to the Mexican people. If you look back at what happened in 1938, Mexicans piled into the streets and demanded that the socialist president nationalize 17 different, mostly American and British oil companies. They wanted them to do that. They felt that they were being exploited. And when those companies asked for money, absolutely, to be paid back, Mexicans handed in all of their valuables. They handed in jewelry, they handed in chickens. If they were poor, they handed in musical instruments. So this is a long tradition. This is going to be a big psychological change for the country.
All right, end of an era. Michelle, thanks so much for coming by.
And still ahead, we will show you the cheap smartphone that's gaining a cult-like following in China and posing the latest threat to Apple. But first, how commodities, treasuries, and currencies perform today.
Some new trends about what kind of phones people are buying these days. Gartner, a company that tracks technology trends, says global sales of smartphones, ones that get email and allow access to the internet, have finally overtaken sales of so-called dumb phones. Those are the ones that merely make phone calls and send texts. In the second quarter of this year, worldwide sales of smartphones rose more than 46% from the same period in 2012. And 79% of all those smartphones run on Google's Android operating system.
Google's dominance of the smartphone market is not good news for Apple, which lost market share in the second quarter, according to a recent report from the research firm IDC. But Android isn't Apple's only challenge. A small company you've likely never heard of is also gaining ground in one of the world's most important markets, China. Eunice Yoon reports.
You've probably never heard of Xiaomi, but chances are Apple has. The Chinese smartphone maker is gaining a cult-like following in China, rivaling the U.S. tech giants. One reason the local media have dubbed CEO Lei Jun the Steve Jobs of China. Our influence in the Chinese market is very similar to Apple's, he says. China is Apple's biggest market outside the U.S. Yet in the second quarter, the American company was overtaken in smartphone ranking by Xiaomi. Lei started Xiaomi 3 years ago. Like Apple, his company has created an aura of exclusivity around its phones, releasing limited quantities that sell within minutes. But while Apple is secretive about its designs, Xiaomi asks its customers to redesign and invent new features. Our goals are simple, he says. Allow our customers who are interested in smartphones to make suggestions, work with us, and let them enjoy the process. Xiaomi phones don't have the frills of an iPhone, but at $240, just a third the price of an iPhone here, they're a decent substitute for many Chinese.
Apple's products are popular here, yet with 300 million Chinese already using high-end handsets, most analysts say that the next phase of growth will be in low-cost smartphones.
Xiaomi keeps prices down by selling only online and markets through word of mouth. Most Chinese customers don't believe ads, he says. They trust their friends. Xiaomi sold 7 million handsets last year and plans to sell more than double that this year, still well behind Apple's iPhone sales here. Xiaomi is starting to look beyond its borders. I believe Americans and Europeans would like our products, he says, a hint that maybe one day Xiaomi will take on Apple on its home turf. For Nightly Business Report, I'm Eunice Yoon in Beijing.
And finally tonight, where were you 10 years ago tonight? If you were on the East Coast of the United States, chances are you were likely in the dark. Today marks the 10-year anniversary of a massive East Coast blackout caused by a storm in Ohio that eventually shut power to nearly 50 million people from Michigan to New England, all the way down to the Mid-Atlantic region and even up to parts of Canada. Hopefully, with cooler temperatures across much of the nation and less of a strain on the nation's power grid, nothing like that will happen again tonight, Tyler. I was in our offices at Nightly Business Report, and I had to walk down 19 flights. 19 flights.
I remember we had guests coming to town and no air conditioning, and that was a problem. That was a problem. So we injected liquidity and stayed cool that way. We want to hear from you. Send us one stock you'd like our Market Monitor guest to discuss on Friday. Log on to our website, nbr.com. Click on the link to submit your question, and don't forget to include where you're from.
And that's Nightly Business Report for tonight. I'm Susie Garrow. Thanks for watching.
And thanks from me as well. I'm Tyler Matheson. Have a great evening, everybody. We'll see you back here tomorrow, Thursday night.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrow with the Nightly Business Report News Brief. Earnings at tech bellwether Cisco grew last quarter, but shares tumbled in late trading on a weak full-year outlook and plans to cut 4,000 jobs worldwide. On Wall Street today, stocks got pounded, hurt by a 4.5% drop in shares of Macy's on weak sales last quarter, raising concerns about lower spending and the impact on other retailer earnings. The Dow had its worst day since the end of June, falling 113 points. The Nasdaq lower by 15, and the S&P down 8 points. Apple shares closed another 2% higher, briefly trading above $500. U.S. officials charged two former London-based J.P. Morgan traders with trying to conceal billions in trading losses. And the New York Fed says overall household debt is now at the lowest level since 2006. Be sure to tune into Nightly Business Report right here on your public television station.